What's up everybody? Welcome to the Stocks channel. My name is Cory, and Friday in the stock market we saw very bearish price action slicing through very critical support like a hot knife through butter. Is the bear market finally here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So we have a lot to go over today because we do have two very bearish looking candles on SPY and we did lose very critical support. So the first thing we need to cover is that we are seeing high volume selling, we are losing critical support, and we do have very bearish looking price action. So we have to start taking the bear market scenario very seriously. Are we officially in a bear market? No, we are not in a bear market just yet. But when you start seeing price action like this and you see very weak market that just slices through very critical support, that is significantly increasing the probabilities we are going to see the bear market. Now, in my personal opinion, I don't think we are in a bear market until we see SPY slicing down and making new lows, which will mean SPY needs to take out those lows down there right around 416 or the low from February 24th right around 411. Remember, we still do have a gap on SPY at 400, and it's very likely with bearish price action as we start slicing through critical support that the market is trying to get to those lower support levels around 400 to 390. So the first thing I want you to do is take the downside scenario extremely seriously, because price action like this doesn't happen without a very specific reason, and this price action looks very motivated to continue to the downside. The second thing I want you to pay attention to is that all downtrends and all bear markets have very strong counter trend relief rallies. So you can't just start piling into short positions thinking this is a free money situation and we're just going crashing down from here and your short positions are about to double. While yes, we are likely going to start trending lower now that we're below critical support, it is very likely that we will see counter trend rallies and a test of these critical resistance levels that we did break right through. So don't rule out the possibility in SPY that we are going to see some sort of counter trend rally to retest that breakdown, because even though we did spend a lot of time at 438, we did not spend any time at 433.5, and I do think that level is going to be critical. So in the bearish price action scenario, even though we do have a lot of catalysts going over the next couple of weeks, we can't just completely ignore the fact that we sliced right through 433 and 428. This isn't something that happened over the course of weeks. This happened in a single day where we sliced through two very critical support levels, closing near the low of the day and way outside the lower Bollinger Band, which tells you there was no buyers and a lot of motivated sellers. And that is very bearish price action anytime you see something that happens in that fashion. So from here, you're looking for a rejection at resistance to confirm the bear market, which means we should come back up here and retest this level around 433. And then if we start to see a drastic rejection and a very sharp sell-off, we will more than likely be looking for a full-blown capitulation, which will send us into the bear market scenario where we'll likely see SPY down around 400 to 390. Now, this counter trend rally could go all the way back up to 438, or it could come all the way back up to some other value below this resistance trend line, which takes us up to about 443 to 444. So I'm not saying I know exactly where we're going to retest, but I am telling you to expect a rejection at resistance until we get confirmation of a bullish breakout. Otherwise, you need to be looking for more downside. So in this event that we do get this counter trend rally, you're looking for that strong rejection to confirm the bear market. And at that point, at a very minimum, I would be looking for a retest of the lows right around 420 to 416. It's very likely we're going to see a scenario where we could see mass capitulation because a lot of people's stop losses are going to be below this previous low. So if we see price action breaking below that low, it is instantly going to start liquidating positions and you are going to see a lot of stop losses being triggered, which is going to help the waterfall wave of selling, and that's going to speed up the process to the downside. Remember, I always tell you that bears take the elevator down, so don't expect this to be a slow process. It could be a very quick process as soon as next week, even though we do have those big tech earnings, which will likely have some catalyst effect on the counter trend rally or expediting the selling. You are going to see this process happening much faster than you possibly expect. So while nobody knows exactly what's going to happen in what time frame, don't necessarily expect the downside scenario to drag out over the course of 4 to 6 weeks, because bears take the elevator down. It is very likely just going to rip the band-aid off, and we are very likely going to see that capitulation sooner rather than later. So from here, I would be looking for something that happens very quickly, and if we get that rejection from resistance, it is more than likely going to be a straight shot down to those lower prices. So for that reason, you now have critical resistance at our old critical support, which is this zone right around 433 to 438. And if we do break above 438, you still need to be cautious because we'll have resistance at the resistance trend line. So any of these scenarios could play out to the downside. Otherwise, we would be seeing something more bullish where we come all the way back up to retest 450, but we really shouldn't be getting bullish until we start closing above 450. So all momentum is to the downside and all risk is going to be towards that water wall wave of selling, which could lead to a capitulation event. Now, also keep in mind that everybody is getting bearish and for good reason. But usually when everybody loads up to the sell side, that does increase the probability of a very impulsive bounce to the upside. So don't get fooled on any moves to the upside unless they get bullish confirmation, which is going to require closes above 444 or 450. And if you start seeing multiple closes above those levels, then you can start getting more bullish. So don't ignore the bearish price action and know these critical levels and understand this is a process that will likely unfold very quickly. So just as a recap, if we start breaking below these lows, that will be the stop loss raid and that will expedite the selling, which means we'll see that gap fill at $400 very quickly. And below 400, you're looking for very strong support right around 390. We're getting a lot more bullish above 444 and 450, but we don't want to assume we're going to break those levels. We want the price action to prove it. And right now, the price action is extremely bearish. So there's no reason to be expecting any more bullish scenarios. Remember, we did have a valid zigzag pattern if we held above 433. But we did not hold above 433 and we decisively sliced right through it like a hot knife through butter, like it wasn't even there. So there is no longer a valid zigzag pattern to the upside. We're seeing the higher volume selling, so you definitely can't ignore that. And everybody is getting ready to panic sell, which means we could see full-blown capitulation. So I know I've said it multiple times in multiple different ways, but you need to be extremely cautious in the stock market right now. And if you don't think we can go much lower, you need to reevaluate the whole entire market. Zoom out, look big picture, and understand that yes, while we are still in a trading range, things are looking very bearish to the downside if we lose this support level at 416. So in the short term, you can still take short trades or long trades. And if you're taking long trades, just be very, very selective on your entries and make sure you're not trying to swing trade to longer term prices. You're in and out off support, you're selling at resistance, or you're shorting at resistance and covering at support. You need to be very disciplined as a trader, and as an investor, you're just sitting back, waiting at very critical levels of where you want to start accumulating and start developing your plan now so that you don't have to do any sort of emotional thinking when we get there. If you know your buy levels now, you will not have to use emotions when the time comes to buy. Your conviction to buy at those levels should be so high that you go set the limit buy orders right now and then let the price action get you there over time, and then your limit orders will trigger. If you don't have that kind of conviction to buy at those levels, then you need to do more analysis on where you want to buy, and then you need to be confident that you want to buy at those levels. As a trader, it's going to be very volatile, and we will see that in the VIX, and you need to take the volatility seriously because it could get out of control, and we could see it escalating very quickly. So follow price action very closely from here, and price action right now is telling us to be very cautious and expect lower prices. On the NASDAQ 100 triple Qs, we see a very similar story as SPY, slicing right through those critical support levels. Remember, we needed to see this level at 334 hold up, and we opened the day on Friday at that level, got rejected, and instantly started to puke to the downside, also slicing through another level right around 326. We closed below the lower Bollinger Band, and we have a very bearish looking 2 days of candles, and we are seeing increased selling volume. So the next low on the triple Qs is a retest of the double bottom off of 318. And if we lose that support level, you are going to see the stop braid, which takes us down to close the gap at 315. And the triple Qs will likely start trending down towards $300 below that gap fill. So just like on SPY, we do have the possibility of a counter trend rally, especially given that we're going into big tech earnings. And there is going to be the possibility that big tech earnings go very well and cause a short covering rally and do get us back up to test resistance. So on the triple Qs, we can't get bullish until we start closing above 347, and our resistance trend line only takes us back up to about 341. So in a very bullish catalyst, we could bounce all the way back up to 341, still get rejected, and still see that full-blown capitulation and go all the way down there and close the gap at 315. Now, if we start breaking above 341, there's still the possibility we're going to retest 347, and then we could still get rejected and start heading lower. Now we can start thinking a lot more bullish if we see something getting us above 347, bouncing and coming up here to test that critical resistance around 357. And then of course, breaking above that level will be a bullish breakout. But just like I said on SPY, there's no reason to be expecting a bullish breakout until we see it in the price action. So we need to go a long ways to the upside before we even consider the possibility that this is a bull market breakout. Remember, below 334, we need to be more bearish, and we are now below 334, and the price action is very bearish, breaking down through that level. So this is a market with very motivated sellers. So look for the potential of the rejection at 341. And don't assume we will break that level. If anything, that is going to be a risk reward short trade setup. And don't forget, the elevator down scenario means there is no guarantee we even need to bounce from here. We could still just go straight down, hit those lows, and then get the counter trend rally from there. So there is a lot to consider. And essentially what I'm telling you is that it is a risk off market below these critical levels. And when you start to see higher volume selling, there's always the possibility you get capitulation. And if you don't know what capitulation is, it is essentially just a waterfall down with no bounces on the way lower. It is everybody running for the door, nobody is willing to buy, and every day the market just continues to go lower day after day, and there's just no bounce in sight until we hit a very critical bottom, and then we start to see short covering rallies as people start to buy back into the market. So there is the possibility of capitulation, especially if big tech earnings don't go well, or we see some other sort of black swan event that spooks the market from here. So the market is very fragile at these levels, and the next critical breakdown is going to be below this low at 318, and that is what could lead to that full-blown capitulation that sends us down into that waterfall wave of selling as we see an increase in selling volume as we just slice through support and start going down in a straight line. So even though I'm saying there's the possibility we get the counter trend bounce and get rejected from resistance, that is not a guarantee. It's still possible we just start going straight down from here, blast through all of those stop losses, and go to much lower prices. So if you're not hearing risk off by now, you're not listening, because this is a very risk off market, and anything to the upside should be treated with skepticism. Make the price action prove the bullish breakouts. Otherwise, we are going much lower, and we're going to continue to slice through support levels. In the Dow Jones, we were down 2.71% on Friday, and we also sliced through that critical support level at 340. So all three indices lost critical support. SPY lost 433, the QQQs lost 334, and the Dow Jones lost 340. If you look at the Dow Jones, you can see the last 2 days of candles are completely to the downside, and we went from a false bullish breakout straight down through critical support in only 2 short days. That is extremely bearish no matter how you look at it, and it does look like we now have a confirmed double top on the daily chart, which means the Dow Jones could be heading all the way down to 326. I drew it this way as parity just between the double top to take you down to that price target, but more than likely it's going to be a very expedited sell-off as we take the elevator down and go straight down to that price target at the Dow Jones at 326. So that doesn't mean we get no bounces from here. Just as I said before, there's the possibility we bounce up to retest support as resistance, which is going to be this level at 340 and right around 342, and we could go as high as to about 345 to 346. But don't rule out the possibility of capitulation where we just go straight down to that price target in a straight line without bouncing, because everybody is panic selling and nobody is willing to buy. So just as I said in SPY and the QQQs, there is a lot of downside risk in the Dow Jones as well, especially with this confirmed double top look, because we did break down through the neckline after we got rejected twice at 353. So this is a risk off market with a lot of potential downside, so be cautious and watch these critical levels. To the upside on the Dow Jones, you have 340 and 346, and if we break back above 350, that will be looking bullish, but we're not getting bullish until the price action proves it to us. Below 340, we're looking for price targets of support at 333 and 326. On the Russell 2000 small caps, we did close the gap down here at 195.7, but that level did not act as support as we sliced right through it, and we're coming all the way back down to retest the lows around 192.7. Below that, we still have strong support around 191.5. But if we lose that support level, we are going back into the bear market in the small caps with a price target all the way down there at 170. You can see we did regain the full bear trend today in the small caps, and we're slicing down through some critical support, and we now are back down below the breakout level, which was the resistance trend line, and that level did not act as support this time. We see an increase in volume as we break through support, so just like the rest of the indices, this is extremely bearish looking. We have the bear trend with bearish price action, so it's not likely we're going to hold up above this support, which will expedite the selling, which will lead to capitulation, which will lead to a waterfall wave of selling to get down to that price target sooner rather than later. So take all of this seriously in the small caps. You should not be getting bullish until we can get back above 203 or at least back above 208. So be very risk off and very cautious. And remember, even if we do see counter trend bounces from here, you're looking for a rejection at resistance levels, and in the small cap sets right around 196 all the way up here to about 199. On the ARKK ETF, we were down 1.65% and we're back down to retesting the lows at 52. And if this level does not hold up, you're looking for strong support at 50. And if that level fails, you're looking for a very strong bear market trend to take us all the way down to $40. Just like I said, there is the possibility we get a counter trend rally off of these lows. So if we do start to bounce from here, you're looking for strong resistance right around 59 to 62 and that gap fill right around 66. You're not getting bullish until we close above 71 and lose this bear trend, because this bear market is very strong and you don't want to get bullish in a bear market. This ETF has been in a bear market for a very long time, going all the way back to November of last year, and it has been straight down ever since. So if you don't know what a bear market has the potential to look like, just zoom out on the ETF of the ARKK and then you will see what a bear market could possibly look like and how painful it can be to the downside. On the VIX, we were up 24.39% and the VIX blasted right through 24 and closed all the way above 28. So you can now see the volatility and the fear is here. The VIX above 24 is extremely bearish, and that could lead to panic selling, and we're already starting to see it in just 2 short days. So be very risk off with the VIX above 24, and anytime the VIX stays elevated above 20, we need to be cautious of that bear market scenario. If the VIX starts spiking out into the 30s, we will very clearly see the capitulation as the panic selling picks up and we slice through critical support and start taking out stop losses. So watch the VIX closely, but you already know it's above 24, so you already know to be cautious and you already know to be risk off. On Bitcoin, we're currently sitting around 39,600 and we're back down to testing this support. But remember, we did get a strong rejection at resistance at 42,000 and we do have the bear trend. So it's very likely to lose the support at 39,000 and come back down to retest support at 37,000. Below 37,000, you're looking for a retest of support at 30,000. So as you can tell, things are still looking very bearish in Bitcoin as we do get rejected below 42,000. If we start breaking above 42,000, that will be more bullish, but we don't have the bullish breakout until we start closing above 45,000. So prepare to see the retest on Bitcoin of support at 37,000 as soon as we start breaking down below 39,000. So jumping back over the S&P 500, we spent extra time today going over the bear market scenario because I want to make sure you're all taking this price action seriously and you're prepared for the downside prices. So I know normally we cover more stocks and more sectors, but right now I just want to focus on the indices as a whole, and I want to make sure this message was clearly delivered, and I want to make sure you're prepared going into the next couple of weeks. Volatility is here and panic selling could be right around the corner, but please don't forget that all bear market scenarios and all downtrends have very impulsive counter trend rallies. So you're looking for clear breakouts of bullish levels. Otherwise, you are remaining cautious to the downside. Do not get tricked by any rallies to the upside. And don't forget, there's a possibility we just go straight down from here and reach full-blown capitulation of panic selling before we go any higher. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. As you can see, in 2008, even though that was a bear market, Bank Trade Alerts still beat the market and still had a very positive year. If you want to find out more information about Bank Trade Alerts or learn how to subscribe, you can click on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord server, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.